This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Trading Frank. This is our first strategic webinar for this glorious new year, 2021. Welcome. It's Sunday, approximately 9:10 p.m. on January 3rd, 2021. This is our strategic weekend webinars that we do every week. Full disclosure, this is purely for financial education, not for any solicitation or advice. Simple disclosure. And let us begin. A quick reminder, these sessions are uploaded directly to the real-time Twitter feed, approximately 20 to 25 minutes right after we get done, and then uploaded to the Clueless Trading YouTube channel either tonight or by early tomorrow morning. So anyone who cannot attend tonight can, of course, review it at their own convenience, hopefully before the market starts. So welcome. Happy New Year to all of you. Thanks for still being with Clueless Trading. It means a lot to me. Great to have this whole crowd here, given the fact that I'm the true ultimate solo trader. I thrive on solitude when it comes to trading. And it's always great to have a great crowd when we do these webinars. And of course, during the trading day, when many of you are DMing me and stuff like that. So couple of things that I don't write a script, right? I'm unscripted. That's one thing that I have common with one of the wildest and most successful politicians of all times, which is Donald J. Trump. Okay, which is that I just speak my mind. So one of the things that a couple of things that I want to mention, which if you want to call it New Year's resolutions, one is I'm going to take a heck of a lot more risk. Okay. I spent the weekend going over and back testing and looking at my whole trading portfolios. Okay. And I said, my God, I called that and I missed it from A to Z. I caught a good bunch in the middle, and there are many stocks like that. How much could I have made? So one of the things that you have to do on the first point is you have to really feel crappy about yourself. You do. You have to feel really angry and crappy about yourself about things that you did not hold and stick with, the discipline, the patience, the swing trades and stuff that I talk about, stuff that you guys know, okay? And they went exactly and far beyond what I put across. Many, many stocks, small caps and big caps, whether it be ServiceNow, whether it be CrowdStrike, which I came in late, but still, whether it be Tesla. And I was telling Leah, hi K-Bot, how are you? I slapped myself. Like, my God, it's right there in front of my screen. I'm looking at those calls at 6. They go to $30 in a day. Then we'll talk about those type of technical bubbles that happen. There's nothing wrong with it. So point number one, and I'm not suggesting this to you, all of you guys, I'm just talking about myself. Okay, I'm going to take a heck of a lot more risk, and I'm going to stick to my discipline on my charts, which work out 80 to 90% of time. And of course, the time frame that they work out sometimes gets tricky because of the intense volatility in the market. Point number two, volatility in the market in 2021 is going to be intense. You think this year was intense? 2021 volatility, believe me, whether Biden is officially elected president, we don't know that yet. Okay, and that's another point that I'm going to cover. Or whether Trump stays as president, the volatility this year is going to be intense. So last year, if you want to look at it that way, which was 2020, should have trained us on how to embrace volatility, get completely piss scared a lot, but yet stick to positions that we believe in. And regardless of the chart swing around, we have to stick with it. Now, point number two. Point number three, rules need to be broken. Absolutely. There is no one rule in the market. On my ACS advanced coaching sessions that many of you are students, I know Leah is a very good student, if I may add, is the fact that rules need to be broken. There are no simple answers, but there is a core discipline that one can follow. And that core discipline is that you have to take risk. You have to research the companies on your side, because my job is not to be a research analyst. That was my old job on Wall Street. Okay? My job is to show the charts, the long term, the short term, and you have to decide whether or not you want to hold that position, take profits, staggered profits along the way, and still stick with it and do some research. And of course, I talk about some of those companies on my webinars, why I like them, things like that. You know, one stock that I mentioned, like CrowdStrike or Blink or whatever. So regardless of if they're down $1 or $2 or $3 on a certain day, means nothing. Point number 4. Are you guys still with me so far?
Yes.
Good. Anyone else with me so far?
Yes.
Good.
Yes.
The point number 4 is, let's not be stricken by a fatal disease. It's not COVID-19 when it comes to trading. It's called analysis paralysis. Okay? Freezing just because there is some intense volatility on a certain day or a certain week. We are all victims of analysis paralysis. Do not try to be, and I'm just suggesting this, you can do whatever you want. Do not try to be a valuation expert. I do a lot of reading. I did a lot of reading this weekend. And they say, oh, the PE of the S&P 500 is 27. It's almost as high as the overall indices, almost as high as 1999. You know, 1999, by the way, was a great year. It was 2000 when the tech market collapsed. This is nothing like 2000, believe me. I used to work on Wall Street at that time. I just started a couple of years ago. And trust me, this is nothing like 2000. These are real companies making real money. So they'll say, you'll hear so many people saying the PE, the standard valuations, you know, price to earnings ratio and stuff. That's all they talk about. Well, how about looking at the PEG, which is the price to earnings divided by the growth rate. So if a company is growing at 50% a year, which many of these new companies, tech companies are growing at, okay, 50% a year, then the PEG is not 27. Maybe it's 2 or 3. A PEG, a PEG ratio, okay? This is a pure fundamental analysis. The PEG ratio below 4 is fine. It's completely fine. So number 3, I was reading this fantastic article from a serious, you know, financial analyst, whatever, on Twitter. The PE to the free cash flow. All right, this is like your Harvard Business School classes. The PE meaning how overvalued a company is, or what the valuation of companies, dividing the FCF. What is the free cash flow? The bottom line is, what is the free cash flow after the company revenues, after they pay the SGA, the expenses, the administrative expenses, and all that stuff? What is the free cash flow that's coming in? And I saw that chart. It's on my iPhone. I'll post it tomorrow. Was actually one of the on the lower end compared to the last 20 years. So if more companies have great cash flow, actual cash, money, dollar, okay, the US dollar, then that's great. So there's many ways to value a company. So please, the point that I'm trying to make is stop trying to overanalyze companies. If the chart is looking good, if it's flying, then be in it. manage your positions, which is one of the hardest things to do, I know, but you got to be in it. Like Tesla, which is most probably $1,000 stock very soon. Very soon. So please, let's not try to be analysts, or like I say, okay? No analysis paralysis. So point number 5. I think I'm getting to the points fine because I didn't write this down, so I'm just saying at the top of my head. Point number 5 is try to, when as a trader for 2021, try to totally segregate what you believe is a short-term trade and what is a swing trade. Don't mix up short-term trades with swing trades. If a company is coming off the bottom, literally off the bottom, a great company like Big C, which is a losing trade right now. All right? Big Commerce. That company is unbelievable. They work with Facebook. They power Facebook's Instagram shops. They work with Shopify. They could get bought out any minute. Don't mix it with a day trade. If you think that the company is good enough, stick with it. Keep on rolling over your options month after month. Don't go too long. Well, do whatever you want, but still, because you'll have to need to pay a lot more for the options, option premiums if you go out too far out, and go with it. So please, point number 5, do not mix. It's a hard discipline, I know, which brings me to my next point. It's a hard discipline trying to mix up a swing trade and look at it as a day trade or a intra-week trade. You can't do that. Okay. Next point. This, don't fall in love. Point number 6 or 7. Okay. Do not fall in love with the company. I don't care if you like it, fall in like with the company. Do not fall in love with the company. Do not fall in love with the company. Okay. You might like it a lot, whether it be Facebook or Apple or Google or this and that, because one analyst downgrade from a powerful analyst, who do have power on the markets and those stocks on a certain day or a certain week can completely wipe you out on that position. So don't fall in love. Point number 8, do not over diversify. Now, what do I mean by that? We talk about so many different stocks. I try to, my service is geared towards all different types of people. So, I'm throwing out all these recommendations and people say, well, I can't really buy all. Well, of course, then neither can I sometimes, or buy the size that I want. But do not over diversify. Try to focus on maybe 10 companies. Get to know them, right? Get to know them. Get to know their trading patterns. Get to know. I'm gonna put 10 here. So, wasn't that a movie with Bo Derek, 10, back in the days? So anyway, so what do you call? I'm a kind of a movie buff, so that's why I mentioned that. So do not over diversify, but at the same time, don't be over concentrated in 1 or 2 stocks that you fall in love with. What else? That's it, basically. I don't want to, keep on going with that. That's basically, a couple of things that I thought about, and I'm sure there's a couple more in my head that I'm going to put across, and that's it. Oh, point number 10, very, very critical. Technical analysis on its own is not a perfect science. Is not a perfect science. Technical analysis on heavy volatility, which can appear from nowhere, whether it be political, whether it be economic, whether it be Fed related, which is a major risk to the markets going forward. Things heat up too much, the Fed will push back or pull back from their quantitative easing programs, i.e. pumping liquidity into the US economy, and believe me, that is going to be a big drop in the market. So the key is that you got to keep that in mind. Technical analysis is a roadmap, but just because it's a roadmap doesn't mean that there is no accidents on the road, that the weather's not going to go bad, that you need to pull the car on the side of the road if you're driving, somewhere on a, let's say, mountainous terrain or whatever. I mean that. You have to know how to change the gears. You need to know what you need to do. So that also applies with volatility. So technical, don't just rely on a chart and say, oh my God, this chart, it looks great. That's it. That's what we do as technical analysts, primarily. But always keep in mind that just because something goes topsy-turvy, something goes like this, doesn't mean that it can go like this. Final point, get ready for big surprises in 2021. What are those big surprises? Big M&A deals, mergers and acquisitions. Smart money, which is truly, let's say, the corporate money, and the treasury money of individual companies, what the cash that they have, they can sense when they need to do those deals, buy up small mid-cap companies, let's say the big ones, before liquidity gets tight. What does the liquidity get tight mean? Simply means when the Fed starts tightening, i.e. draining money out of the US economy. Okay? Now the Fed has openly said they're very friendly. They've openly said that they're going to keep interest rates low for till 2022, maybe 2023. But that doesn't mean they can't start to drain, for a better choice of words, the liquidity swamp. The overall market is up to where it is now. Not every stock, that's for sure. We know that. The market's made new highs. All three major indices, the NASDAQ, the Dow Jones, and the Russell 2000 made new highs on Friday. So many stocks were in the red. Yeah, exactly. So you also have to keep that in mind. So whatever that all I know, and don't talk about myself, is I'm a constant learner, a constant and passionate student of the markets. I'm not happy with my performance in 2020. Did quite well, but I could have done huge. I mean, throw up, I shouldn't say that. It's just like insanely, obscenely huge, based on things that I showed and shared with and originally entered at the beginning of the year, even at the end of last year. And it makes me sick. So if you're not entering 2021 with anger, with the fact that you really want to, kick yourself hard, and you think that, you did fantastic. Maybe some of you did fantastic. Overall, my portfolio did great compared to many other people. But am I happy? No, absolutely not. So I entered 2021 with these points that I just mentioned to you all, and I'm ready to attack the markets. And every lesson that I have learned over the past year, 2 years, I'm going to apply forcefully. I'm going to try to share it with all of you as much as possible. And then you guys take it and do whatever you need to do. So that's it. Good. So any quick questions? None? All right. That sounds good. So let's get this out. Bear with me. Everyone's still here, right?
Sure.
Okay, sounds good.
Yeah.
Okay. All right. So let's look at a few charts and try to figure out what's going on. So here is our, I would consider to be short-term, intermediate-term trading chart, which is the 1 hour chart. And you can see exactly what's going on. Lots of phenomenal volatility. Let's go back to December. This goes back to actually, what was it? All right, middle of December, 18th of December. So look, and every one of these massive, these are massive movements. And these are the true buying opportunities. Okay? Where doubt and fear and stuff have to be thrown out, and you just need to get in there and, not necessarily here because you don't know whether it's going to slip down lower, but if you get a candle like this, you can bet your butt that it's going to trade higher, and that's exactly what it does. It's a 1 hour chart, so that means that it did for maybe 2 days. So this is massive volatility, and this is where we are. The markets made new highs. It was all manipulated because this big candle that appeared at 2 p.m. on Friday did not help the overall individual stocks. Remember, it's a market of stocks, not just a stock market. And I think we all agree with that. So just because the markets can be up 300 points doesn't mean that individual stocks on particular sectors or some stocks that we own or whatever are going to be higher. There's a lot of games that are played: portfolio rebalancing, tax loss selling. Hedge funds are very active in the last 48 hours of a year, end of the year. That was last Thursday, Wednesday and Thursday. And the prime example was last Thursday. Lots of things were read. I'm a straight shooter. I'm telling you the facts. Most of the texts were read, other than Tesla and Netflix. All right. So they're doing all kinds of stuff. Remember, there are hundreds and hundreds, thousands of small to mid-sized hedge funds that are rebalancing their portfolios. Big mutual funds are doing their stuff. So it's a heavy-duty thing. Now, before I go any further, let me warn you about this week. This is going to be a turbulent week, but the markets will still retain their uptrend. I'm telling you right now. I talked to you about it in the last webinars. You guys all know what's going to happen in the next couple of days. We have the Electoral College vote count. We have a massive opposition from about 16, I think 16 so far, senators to oppose the Electoral College votes. There's going to be a lot of political turbulence. Okay? So just be ready for that. Doesn't matter, the charts will show you what the support levels are, what the ranges are, which are very clear. Remember, these were drawn before things happen, so be ready for it. If you think you're going to catch exactly the right moment to buy, you won't, because things are going to happen very quickly. Now, I am a little bit surprised, to be honest with you, that E-mini futures are up about $1.50 right now, 1.75 right now, the ES, because I honestly thought, that's how I prepare myself, that we were going to be down at least 20 handles, minus 20 handles on the E-minis. Dow Jones futures down about 140 points. I was really prepared for that, because this political uncertainty that is coming through in the next 48 to 72 hours, going into Wednesday, and then we have January 20th, which is the handover of the presidency. Okay, but this political uncertainty, I honestly thought the markets would kind of freak out a little bit. Now, I talked about it in my last webinars, but it's not. Now, does that mean some like fantastic stuff? We're going to be on a one-way train, choo-choo train higher? No, but it is encouraging to see that we are holding green with the E-mini futures up about $1.50. That's $1.50, not $150. And the Dow Jones futures, where is it on my screen? Why up almost 20 points, and Nasdaq futures are up right now. Well, actually, Nasdaq futures are down 22 points. Wow, they're dropping hard. Now, the Nasdaq futures might be dropping primarily because we just delisted. The United States just delisted 3 of the largest Chinese companies on the New York Stock Exchange. Not stocks that we trade. I believe it was China Mobile, China Telecom, and the third one I know. So China will retaliate. So we have to be careful. China will retaliate this time, I know, because we have been threatening them to delist companies, Chinese companies here. I know we did very well on Alibaba because I caught exact bottom. I know many of you did very well on it too, so congratulations. But I'm not quite sure why Nasdaq futures right now are down 25 points while the E-mini futures are slightly higher. But I believe that has partly to do with the fact that if China does retaliate, it will affect whether, this is not a nationalistic thing, okay, but it will affect US tech companies that do and generate significant revenues in one of the fastest growing markets in the world, the fastest growing market in the world, which is China. So be careful. So looking at that, there are many ways to skin the cat, i.e. make money on the market. So this is E-mini futures. You don't need to be on specific techs per se. You could mean selective stocks, which have nothing to do with no exposure to China. So this is what it looks like. So 2021, again, like 2020, is going to be the year of trying to read the tea leaves through technical charts. So no questions here. It still looks pretty damn good. This is where we are right now on the S&P E-mini futures. This is a live chart. These are the support lines, and it looks good. Next, let's try to look at, I got to pull it up. Hold on. Let's try to look at a slightly longer term chart. And in the meantime, apply everything that you've learned in 2020, i.e. construct your own charts. Become more self-reliant. Become more self-reliant, okay? This is where we are right now. Looks like some selling going on. Okay. This is your stick to S&P right now. This is S&P 500, definitively overbought, no question about it. No question about it. All you have to do is visually look at the red line, which is the 50-day moving average, and where we are moving quite far, quite quickly away from the highway. This is the highway that it doesn't have to hug and travel on, but should be somewhat closer. But this is what we're looking at. But if you glance at the overall chart, the external chart, everything still looks pretty damn good. And like I said in the past webinar, we probably have another 2 or 3 more days, probably till tomorrow, day after is Tuesday, before we start to ease back a little bit. And then January should, after the first level of high volatility, the month of January should end up higher, given the amount of money, the inflows that are coming into the equity markets, away from both from the money market accounts as well as from money getting reallocated from the fixed income treasury market, which is about to break 1% on the 10-year yield, which means that money's coming out of there and they're entering the stock market. So this is where we are. So I am going to be, again, going to take more risk, but I'm also going to be more proactive in managing my positions. If somebody says, well, what do you think this stock is going to be 3 months from now? Well, honestly, I have no freaking clue. Well, some stocks I do have a freaking clue because they're coming off the bottom. Those are the ones that I like the Boeings, like the big C's and stuff like that. But if you want to be the last, like if you're playing the game of musical chairs, and when the music stops, even if it's, stops a little bit, and you don't find a chair to sit on, you're going to get blown up. So don't get overexcited with anything. There'll be special situations, certain individual stocks in certain sectors which have a lot more to catch up, and that's the way it goes. So this is your daily chart on the S&P 500. Looks pretty damn good. Best case scenario, the month of January, we are going to hit 4,000. 4,000 on the S&P 500. Okay, before it starts to ease back, right here, right there. Here's your acceleration channel. So just trying to read the tea leaves. Best case scenario, things go right. There's no crazy violence on the streets. Not that the market really cares about that, but and there's a presidential handover, whatever the case may be. You are looking at the upper end of the acceleration channel, which is roughly around 4,000, and the S&P. Now, there's a lot of traders who try to trade individual stocks, but they're not really equipped for it. Now, what do I mean by that? They're not mentally equipped to deal with the volatility. So they get bent out of shape. And then they ask simple questions, which the market will never give you a simple answer. And that's one thing all of us should have learned from 2020. There are no simple answers. So in that case, those people should just trade the indices, the SPY, the QQQ, the IWM, the DIA, the Dow Jones Industrial Average Diamonds. Stick with that, because there is no individual stock risk when you trade indices. You guys understand that simply, right? You want to play the Teslas, you want to play the Shopifys, you want to play the CrowdStrikes, you want to play the AMDs and the Nvidias and this and that and a bunch of biotechs. Well, you better have the mental muscle to deal with the volatility. And there is nothing wrong by saying, no, you don't have the mental muscle. There's nothing wrong to admit to oneself, looking at the mirror saying, no, I can handle that volatility. I'm not equipped for it mentally. And it doesn't matter how big or small your account is, trust me. Then just move away from that. Force yourself to just trade the indices, because those are pure basket plays where you don't have to worry about when the one analyst is downgrading that stock on a day that the markets are up 300 points and that stock is red. It's actually quite simple. So think about that. If you don't have the mental muscle, the risk factor, okay, to deal with individual stocks, or especially in heavy, high beta momentum stocks, the ones that move up 15, down 20, up 30, down 40, and there are many of those that we trade, then don't trade them. Because all it's going to do is kill your confidence, and that you're just going to be miserable. And misery does not make money. Exactly. And you all know exactly what I'm talking about. Trade the simple indices, the SPY, QQQ, IWM, the DIA, and the other derivative ETFs that are leveraged ETFs that are associated with those indices. Trade those. So you are not held hostage to individual stock risk. Okay, coming back to it, the daily, still looking good. Let's take a look at the weekly. And please stop me with any quick questions you have, because these sessions are really meant for you all, not for me. Looks like a nice triple top here with a it's still a bull flag with a pullback to 30,414. Okay, so we could drop like 90 points, 100 points on the Dow, no problem. It still looks good. All right, let's pull up the weekly. These are all preset from way back when I drew it. This is your weekly chart of the S&P 500 futures, the E-minis. Upper Bollinger, where it gets really stretched, is 38.36. That's roughly about 90 points from here. 90 times 8 is 700 points on the Dow. We could get there by the end of January, after we back and fill a little bit. But so far, it is still a very strong technical chart. Very strong technical chart. We have been above the 80 RSI since November 16th. My son's birthday was November 14th. Yes. Since November 16th, we have not even come close to kissing the 80 RSI. That shows internal strength in a big way. Markets move sideways from May 25th. Just look at this. May 25th, came back and retested the 80 RSI, which is the upper range, repeatedly, but stayed above the 80 RSI till August. 3 months. 3 months. This started in November, so 3 months ends in January, right? December, January, February. 3 months actually ends in February. So we could stay above the 80 RSI, minor volatility, but overall uptrend intact, no problem. Now this is the S&P 500. Okay, we're not talking about the techs. Okay, let's look at the QQQs. Bear with me. So, okay, here we go. So let's look at the Qs. This is not a real-time chart. This is the actual NASDAQ 100 ETF, which includes most of the big cap biotech and the big cap technology stocks. They wanted it, it's the old days, they called it painting the tape. Anyone know that term, painting the tape? Has anyone heard that term, painting the tape? Yes, no, Chris, K-Bot, Leah, Mike?
No, I've never heard it.
I'm sorry, you haven't? You've never heard the term painting the tape?
No, sir.
Oh, okay, Google it, okay? Painting the tape, you know, it's an old term on Wall Street. It simply means that fund managers and people who wanted to make their portfolios look good just decided to basically bump up, throw out a buy program at the end of the day just so that the year-end portfolios look good. It's like window dressing, okay? So it's almost like it's just fake. You paint the tape so it looks good. And that's exactly what they did on Friday. They painted the tape at 4, look at that, at 2 p.m. Big buy programs, just went boom. Big buy programs came in. So the indices looked fantastic. So the headlines could run all through the weekend, all through New Year's. Markets hit new highs, markets hit new highs. It builds a level of confidence for the US consumer and the US investor to feel good at the year end, keep their money in the mutual funds, which are the primary holders of American money. They are the 800-pound gorilla, and look good. So they painted the tape hard starting at 2 p.m. on Friday. And you can see that clearly here. There was absolutely no reason for a big move reversal on the Dow Jones starting at 2 p.m. There was no reason, because this was the morning. This was 11. It looked like we were going to come and retest the 311 level on the Qs. But they held it, and then they just put out the buy programs. It's a fake buy program. This happens a lot, which brings me to another major point. The market is totally manipulated. Now, whether you like it or not, that's not my problem. Deal with it. The market is not, as I say repeatedly, a walk in the park. That's the reason why you're looking great on a stock that opens up. And I always say, when we gap up open, take your profits, whatever you can, because within 10 to 20 minutes, 90% of the time, they'll pull it down, especially when the hedge funds are active. And believe me, the hedge funds, with their AI, artificial intelligence, black box machines, are going to be a lot more active this year than you can ever imagine. So they painted the tape. So it looked fantastic. This was the close on Friday. Who can say this chart doesn't look great? So given the fact that NASDAQ futures are down right now 30 points, it should actually be up here, up 30 points. So why is it down 30 points? For some kind of, I gave you one reason on the Chinese tech war that we are kind of overheating right now. So they're painting the tape. So get ready for a lot of these fake moves in 2021. Here's your gap. This would be a phenomenal buying opportunity. And that means that, you know, Apple will be down $10 and blah, blah, blah. Nvidia will be down 20, all kinds of stuff. So that's it. That's your, you know, picture on the market that I want to show. I'm going to keep on going on in the market. Let's look at stocks here, guys. So these are stocks that I like. Let me see if I can show one more thing. I can do it here. Let's look at the E-minis on the real live charts. Oops, sorry. Anyway, some of the things that I'm talking about is making some sense, or everyone's kind of lost. I mean, it's kind of simple stuff that I'm talking about, but important, simple stuff.
Makes sense.
Okay. Like they say, everybody's smart in their own way, so they have to find their own style, what they want to do. I'm just sharing a few things that I think, you know, overall, which should make some sense. Here's your daily chart on the E-minis. Still looking pretty fantastic. Still strong. Overbought, but still strong. This is a daily chart. The weekly, this is on Thinkorswim, so it looks a little bit different than investing.com. Weekly still looks pretty damn good. Look at that. No signs of a sharp move down, whatever. Still has room to move higher. All these internals are good. So there we go. Now, we have the Georgia election runoff on Wednesday. That is pretty critical. Now, the simple way of looking at it is that if the two Democrats versus two Republicans, right? So if it's a Democratic sweep, like both the Democrats win, the simple explanation is, or at least through the media, that is the markets will take a slight dip, sharp dip, quick, sharp intraday volatility, because that means the Senate is going to be fully controlled by the Democrats. That is not necessarily good, so you all know. We need a slightly divided government, because the Congress, the House, is majority Democrats. So the Senate goes fully Democrat. That means all three branches of the U.S. government are, you know, are going to be controlled by the Dems. So the market might not like that, because that means bills, major bills that might affect the stock market with a capital gains rate or tax rates and blah, 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 might be, you know, not too favorable to Wall Street, even though it'll be phenomenal for clean energy. So pump up hard. All right. So, but if it's a tie, then that's fine. And if it's a Republican win in Georgia, let's say the two Republican candidates, you know, win, then the markets are going to be okay with it. So it's not like, you know, it's not a black and white situation, but I need to, you know, explain to you guys that Wednesday is going to be a very tricky day. Now, the vote count might not be finalized on Wednesday night, might be a couple of days, but let's see. But keep that in mind, please. All right, let's talk stocks here. Bitcoin's going nuts, absolute nuts, right? And it looks like it wants to go higher. So aside from playing direct Bitcoin and buying one Bitcoin at $34,000, $33,000, these are the stocks that you might want to jump in. This is a Bitcoin miner. They own the Marathon Patent Group, Mara. Leah knows that. She owns it. So Mara is something that is certainly very overvalued right now, but these are pure plays on the Bitcoin market, on the BTC market. All right. And there are Bitcoin funds. I think one is called Gray something. So you can always look at those. So, but these are the BDC plays that you can, you need to, now can somebody tell me why Bitcoin is going up like this? Because I know the answer, aside from the fact that everybody and their mothers and their grandmothers, just that's it, I'm buying Bitcoin, you know? What is the real reason why Bitcoin's going up like this? Like literally stratospheric. It was 17,000. It's almost up 100% in 3 weeks.
May I try to answer?
Of course, Leah.
That big institutions and big companies are putting money into Bitcoin, so it's becoming more trustworthy for many.
That's a very, very good answer. There is one that is one other very powerful answer. Anyone else? K-Bot? No? Okay. Anyone else want to volunteer? Why Bitcoin's going up like this? I mean, it's literally going up like 10% a day.
Does that have something to do with China not being able to mine it? They're having an energy shortage.
You have the answer, but it's kind of convoluted. You know what I'm saying? But you're close to the answer. I'll tell you. No, you kind of nailed it. But if you mention that to somebody, they'll be like, but you're kind of like circling around the answer, but you don't have it yet. Anyone else want to try before I answer the question? Okay. Well, Leah's answer was certainly very correct, but Chris's answer was, for a better choice of words, a little bit more correct, because there is not enough Bitcoin to go around. Okay, Bitcoin is a very complex structure. It is mined through these supercomputers. I mean, I had friends, some very smart Russian friends. I still have them here in the New York area, New Jersey area, and he was a Bitcoin miner way back. You're talking 2014, 2015. I said, "What's Bitcoin mining?" So he had one part of his apartment with these huge servers. His electric bill was $3,000 a month because he was running these machines mining Bitcoin. It's like a weird Star Wars kind of thing. I'm like, wow. I knew him because he's a car guy and my son's a big car guy. So, he was much older than my son, but great guy. So Bitcoin mining, exactly. So it's nothing to do with China. It has to do with the overall fact that there is not enough Bitcoin supply. So the people who are trying to buy it, that's why this, you try to buy, like, let's say somebody tries to buy 2 coins, right? That's $68,000. And there's not, there's not enough. And the whatever the Bitcoin is, and this is Leah's answer, which is the second part, which is that right, is held in very powerful hands. Did you know that PayPal owns almost 70% of Bitcoin? 70% of the overall supply. Go ahead.
There's this a MicroStrategy company that
That's
also
right.
bought
I
1
know.
billion.
MSTR. MSTR has taken literally all their cash and said, let's just pile it into Bitcoin. On top of that, you get guys like Tom Lee. This is why Mara can go a lot higher. This marathon, because they own the patents, and they just bought, I think, like 60, if you read the news, 60,000 mining computers or something. Like Tom Lee, the guy I admire a lot, the chubby Chinese gentleman, who's the smartest Wall Street analyst I've known from Fundstrat. He said Bitcoin can go to 200,000 next year. I'm like, man, Tom Lee saying this? Who the hell wants to trade stocks and worry about charts? It's freaking throw your money in there, and that's how bubbles burst, because that's what's happening right now. But when bubbles are rising, I'm trying to draw bubbles, are rising, okay? They keep on rising till at one point they start popping. So Bitcoin has huge institutional participation. PayPal, MicroStrategy, Square, Tesla. Did you see the comment from Elon Musk last week that he's thinking of putting a chunk of his of not his cash, company's cash into Bitcoin? It's becoming more acceptable currency. and there's not enough to go around. So this thing can actually go a lot higher. And then Mike Novogratz, who is the ultimate Bitcoin pioneer, spokesperson, says that it can go, like now the numbers are crazy. One guy came out and said it's going to be 1 million. I just holy shit, like what the hell do I know? What the hell
Hey,
do I
Frank,
know? Go ahead.
yeah, Elon Musk, he's been pumping that
Yep.
Dogecoin.
He's been pumping what?
Dogecoin. It's DOGE Dogecoin. He's been plugging that. Every time he does, it goes up.
I'll definitely read up on it because Dogecoin. Remember, it's not just Bitcoin. There's a lot of different cryptos. But remember, Bitcoin is the king. There's Ethereum. There's Litecoin, LTC, and there's Bitcoin Cash. And then there is like 30 different other cryptos because those really don't matter. The one that matters is Bitcoin, Ethereum, Litecoin, and those are the ones. And Ethereum, I like a lot because it's used for financial transactions, ETH. Anyway, I'm going to be doing a whole thing on Bitcoin and stuff, probably sometime maybe on the Wednesday's thing, so we're a little bit more knowledgeable about it. Whichever the case, you want to play the back end of it, the mining part. This one is certainly, like I said, you can certainly do whatever you need to do with it. You can buy some long-term calls on it. You can trade the stock. It's only $10. It was up to 15, pulled back to 10. Technically looks like as long as it's hold 10 or 9, this yellow line here, which is 8, it'll still keep on climbing. Next one, it's a stock that I mentioned a couple of weeks ago. I just had a bit, left it in there, which is BTBT. Okay, BTBT went berserk. I think the time that I mentioned it, it's on my Dropbox thing when I showed the chart. And I know Leah had it and a couple of other people because I get the feedback and I get those DMs like, BTBT, wow. That means they owned it. All right. Look at the volume. Absolutely sickening. Stock just took off like a rocket from 7 to 24 in 1 week. It is definitely a technical breakout. As long as the stock holds 15, 17, it's still going to go higher. Bit Digital. Okay, BTBT. Some of you owned it. Congratulations. This stock looks like it wants to go higher. Now, if somebody says how much higher, well, let's do a Fibonacci retracement on this so we can get an idea. Now, on these type of things, this has no options. So if you got to play the common. So you can use some trailing stops. And when it spikes like that, you definitely want to sell it and then get back in, to maybe the same day with a smaller amount, but you kept most of your profits under your belt. So let's see here, show price on the left. So Fibonacci extension says that the stock can go to $35. Remember, no options on this. You got to buy straight stocks. But I can assure you that the CBOE and the CME, Chicago Board Options Exchange, and the Philadelphia Options Exchange will introduce options because they're in the business of making money of selling the premiums to us. So when something like this is this hot and Bitcoin is this hot, so hot, sizzling, they will introduce options on this, which would be fantastic. So look at this. The 261 point extension is 35.45, and it will get there very quickly. Now, don't ask me when Bitcoin bubble is going to burst a little bit, this and that. I'm going to start charting Bitcoin a little bit more. I do it personally, but I'm going to show it to you all. It can be charted because now it has a long history, and the longer the time frame, easier for technical charting to be put together. So here's BTBT, second. Third one is Riot blockchain. Remember, Bitcoin's technology is basically blockchain technology, right? Read up on it. Now, some people say that this Riot blockchain is a bankrupt company and stuff. I have no idea. All I know is this one also can get up to 25, at least was the high, and it's going to happen real fast, real quick. because what Bitcoin is doing on the other side. This is blockchain technology directly tied in with Bitcoin. Now, the biggest danger is that there's a lot of small retail players in it. So it's like a herd mentality. So if it starts to drop, they all get out at the same time. Whichever the case, as long as the stock can hold 975 to 13, it will go higher. Anyone else have any other Bitcoin type of stocks that you want me, look at? Now, here's a little penny stock play that we like playing or just leaving, because this stock, when I told you guys to buy it around 14 cents, went to 35 cents. This one is also getting into the Bitcoin craze. This is a digital payment system. This TNSP, which is a penny stock. That's why I always say hashtag OTC, speculative. 17 cents. Short-wise, on a weekly basis, this stock can go up to 36 cents again. And that means you get more than a double on your money. These guys, if they issue a statement, this is what these companies do, that they're getting into Bitcoin digital transfers, because that's what these guys do, currency transfers. This stock will go, in my opinion, just on the frenzy, on that day, within an hour, to $1. That means 600% just on the stock. Remember, it's a 15-cent play. So please read up on it. Tesoro Enterprises. Okay? Humble. Global merchant listings and web payment integrations. Imagine it says web payment integrations using Bitcoin or Bitcoin included, whatever. This stock would just go berserk. These are risky plays. You don't have to put your whole net worth in it. And I know there's a lot of players out there who just put so much money in these type of stock and they make millions and they lose millions. But I'm just telling you. Okay? So just get ready for this in 2021. A lot more companies are going to get into Bitcoin. Now, what big stocks are in Bitcoin? Bigger players. Let's look at Square. Fantastic looking chart. This chart was drawn months ago. I still believe Square is $300. Digital payments, plus they are big into Bitcoin. Bitcoin exchange. And remember, Bitcoin exchanges are going to come public very soon, like Coinbase and a couple of others. This is going to be the early theme for 2021. I'm telling you right now. So if you don't feel like buying one Bitcoin at 34,000 bucks, well, you can buy Ethereum and Litecoin and stuff, which is actually up higher this weekend than Bitcoin. They're up about 15% each. Bitcoin is up about 6% right now at 7%. Square is a direct play on the digital economy and, more importantly, on Bitcoin. Let's PayPal, one of the biggest owners of Bitcoin. See you later. Where can PayPal go? Well, a lot higher. Let's look at easy numbers, all right? You don't have to be, like I said, no analysis paralysis here. PayPal can go 275. PayPal will most probably hit 300 very soon. What's going to happen? The digital economy is all of a sudden going to backtrack? No, it's not. Yes, the stock on a valuation standpoint is very overvalued, but I am not going to be an analyst trying to value these powerful companies with the pioneers of the future. Let's look at MSTR, MicroStrategy, a stock no one even knows about. We actually traded MSTR. It's on my Dropbox archive 2 years ago. And these guys, that's why I know the company. It's a software company, MicroStrategy. Okay, look at the stock. I mean, you can't even chart these things. And they're not going away. Just the way Bitcoin is not going away. So basically, if you want, and MSTR calls are pretty damn expensive. And that's another one that I truly, and I mean this, because I love you all and I share it openly, slap myself The calls were 16. The next day they were 40. Buying 1 or 2 calls would have been fantastic. I'm like, what am I overthinking this shit? Why am I overthinking? Because I am the one with the knowledge to look, have those on my screen. I'll show it to you. It's on my screen. Stock is gone. So where can it go? Because now these fund managers, remember, fund managers and a lot of these hedge funds don't think they're all the smartest boys in the town. Yeah, they're all like, Harvard, Stanford, Caltech, but most hedge funds are not even making money, just so you know, aside from some. So let's try to, so they're all going to get into it. So mutual funds are going to get into it, and mutual funds are getting into Bitcoin. Is it a little too late at this stage? I think so. But a 10% correction means it only comes down to 30,000. But we're not looking at specifically Bitcoin. We're looking at the derivatives of Bitcoin, which are like the old saying goes, the people who get really rich on a gold rush are the ones who sell the pickaxes, right? On the old days. So those are the companies like Mara and Riot and BTBT and Square and PayPal, even Nvidia. Nvidia's processor run all the big machines. I'm surprised. I was telling Paul earlier that Nvidia is not up like a gazillion points on this Bitcoin craze. So let's do this. Forget about what the stock was, 140. I'm going to do the Fibonacci extension. What is going on here? I'm going to do the Fib extension from this level when it actually woke up. Right there. It's a double top, triple top breakout. Let's move the prices on the left. You know what Warren Buffett once said about Bitcoin, just like I think last year at one of his annual conferences, or Charlie Munger. No, Warren Buffett said, what did he call Bitcoin like a year or two ago? Does anyone know? Yes, no, maybe? He called it rat poison, because he just said it's a fictional thing. I mean, he just hates Bitcoin. So this is what happens. The old school versus the new school, all right? This is what happens. So I'm going to do a Fibonacci extension, not from the bottom, from here. Where can this go? $500. $500 very soon. MicroStrategy, if Bitcoin continues on its pace, MicroStrategy's value of their Bitcoin holdings will accordingly increase, proportionally increase, and this stock will go to $500. And if you look at the 500 calls, I bet you they're expensive, because I did look and they're expensive because they know it's getting there. Another one, Overstock. They put money into Bitcoin, the CEO, a year ago. But Overstock, for some reason, is not moving with Bitcoin. I have no idea why. Because he was one of the first CEOs who took a whole bunch of his cash holdings and put it into Bitcoin. But the chart looks like pretty crap. But at one point, they might just pick it up and run with it, because it was running, but, whatever. Let's take a look at Nvidia. Nvidia's chart is pretty damn good. It's moving in a tight range. One second. It's moving in a very tight range. Let's enhance this. And these are the guys, their processors, GPU processors are the ones which run all those heavy duty computers, PCs which can't work 24/7 to mine Bitcoin. And Nvidia is certainly, this stock is 550. It's moving in a tight range. Lower end of the range is 510 or 508 or 491. If you want to look at that, we give a couple of points for it. $500 stock. And the upper end of the range is 550. And here is the funny part. It hasn't even crossed above its 50-day moving average yet. The last time I said that was on Amazon 3 weeks ago, and the stock took off and went up 200 points. Nvidia is not even above its 50-day moving average. It is being held down below the 50-day moving average, this red line, and the 34-day moving average. Don't ask me why, because I don't know. Maybe Paul knows. Paul, why are they holding Nvidia down below its 50 and the 34, and it's moving sideways on the lower half of the range? Any
The
idea?
only thing I can think of is, yeah, just that. Can you hear me, Frank?
I can hear you.
Okay. The only thing I can think of is that ARM regulation. There's a lot of naysayers about whether the ARM deal will go through.
If it doesn't go through, yeah, ARM Holdings. ARM is the brains behind most semiconductor chips. An ARM deal can only go through if the Chinese regulators, even though it's not a Chinese company, it's a Dutch company, but it's part of the global semi initiative. The Chinese government has to give it okay with it. Nvidia is very confident that it'll go through, and maybe that's the reason. But as you can clearly see here, the stock is basically just moving sideways. It's moving sideways in a range since November, and one sharp breakout, it'll be up 20 bucks just like this. Whether it's a Bitcoin thing, whether it's some positive news on the ARMS holding acquisition, which is pending, the stock is good to go. And of course, the highs, which are $590. So a couple of great stocks that we mentioned here. And of course, other ones, you know, we already know. I mean, Boeing is one of my favorites for 2021. It's almost a no-brainer, if you ask me. Literally, almost a no-brainer. Hey, I just saw, Paul, that Howard Lindzen now likes Boeing. You know, I just saw that on Stock Twits. He goes, yes, he's looking at it for a short-term trade. This is not a short-term trade. This is actually a long-term trade. Yes, short-term, you can play it too, like we do. This is a beautiful flag, picture perfect. A consolidation, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15, 16 days. 16 days after the big move up in October. This is a beautiful flag. Almost to 80% probability it's going to break out to 240, 260. And of course, my other charts, there's a big gap here. My other charts show the gaps and all that. 260 is a nice gap to fill. Unless some tragedy happens, which it shouldn't, you never know. Then Boeing is almost a sure bet as long as you're a swing trader. Now, it can slip and slide and come down to 210, like no problem. But Boeing, in my opinion, is a reopening trade. Countries are, the 737 MAX is flying again. United Airlines is flying them in February 11th, right before Valentine's. It's a good stuff. Any other quick stocks you guys want to look at? I'll leave it to you right now. So I'm here, and then we're going to wrap up, guys. Red line, what do you want to look at? If you can.
BT, great stock.
I already showed BT.
Yes, I know. I just mentioned.
Yep. So BT can go a lot. This is BT's. Like I said, BT can literally go to. I showed you the Fibonacci extension, $35, like real fast. As long as it holds these levels, which is approximately 19, possibly. You don't want it to go to 14. If it goes to 14, I'll definitely buy it more. But I'm pretty much out of it right now because of the spike. I wish I had a lot more. It was just kind of sleeping there, so it started running. I'm like, wow, that's my recommendation. And then Leah reminded me and 2 other people. I'm like, yes. Okay. Chris, what stock do you want to look at?
Well, I got a couple that I've been looking at.
Go ahead. Make it quick. It's 10:19,
Looks
10:20.
like,
I need my beauty sleep. Yeah.
Well, believe it or not, Lululemon's looks like the chart's ready to take off.
Lulu?
Spotify too. Lululemon's and Spotify.
Okay, yeah, I haven't traded Spotify. Lulu's daily chart is the same story. I don't quite understand why they are holding it right at the 50-day moving average. But the stock certainly looks fine because Lululemon has been a survivor through the whole COVID-19 thing. It looks like there was consistent selling by year-end selling for 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. 9 days in a row, the stock pulled back. As long as the stock holds 337, it's a great, it's a solid trade. There's nothing wrong with Lululemon. Remember, nothing wrong with Lululemon. It's just that it looks like there was consistent selling, like I said, 9 days in a row, and it's resting right at the 50-day moving average. This is your support, 337, and it's okay. Like from a technical standpoint, it's nothing to get excited about, but it's good. It's got cheap because it got oversold here. It got oversold. And this is a powerful stock. It can jump up $5, $6, $7, $8. And I trade Lululemon more on a staggered short-term basis than, and remember, we were in Lululemon when the stock was like 128 and a lot cheaper. I still remember that, okay, way back. So at this point, you need to not fall in love with it, even though you like wearing the tidy Lululemon pants. I'm just kidding. The point is that it's not something from a technical perspective that super exciting, but if it jumps up $4, $5, $6, take the profit. The other one that you mentioned is which one, sir?
Spotify.
Spotify. That's a stock I have on my screen, but I haven't traded. That's a good looking chart. You know, I love Spotify. I think they're amazing. Spotify, and I'm showing you like slightly longer term charts here. You know, short term, the stock moves around. This is the same story for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. And you can see that on light sell volume, the stock basically just kind of is meandering around. So again, that's it's also great. It's kind of a similar chart to Lulu. Now let me show you two other stocks that I like a lot. Ulta Beauty. Okay, I told you stock would go to 190, 290. It actually almost hit 290, even though this is a good looking chart for a simple reason. This is a confirmed. This is not a consolidation pattern. This is a confirmed cup and handle. Ulta Beauty. This is a confirmed cup and handle, a very large one. This is the small one. And it broke out. This stock can go to 320 very soon. This is a confirm. Remember, the stock was very buyable at 260, 270. That's where we were buying those cheap lottos. And then one day those lottos just picked up and went nuts. They were up 900%. 900%. And I put that out. So this is a good looking chart. I like it a lot. This is from a technical standpoint. And the stock is good for breaking out over 295, 320. Upper end of the range is 350. Ulta Beauty. Now there is a company that I traded a long time ago, and we traded for earnings, which I looked at the other day as I was doing some research, and I said, "Oh my God, I can't believe where it came from." Do you know who? Maybe Leah knows. Leah, do you know
Yeah.
what? Do you know a company which is similar to Ulta Beauty? It's called it's called ELF Beauty, ELF.
Oh, okay.
Okay. Look at this chart. I remember we were trading the stock around here. Okay, actually before that. And look at this chart. This stock just got added to the S&P 600, which is the other indices. And this stock can go well above $30. This is Ulta Beauty Junior, ELF Beauty. Here, ELF Beauty. Look at the daily chart, a weekly chart. Woof. It broke out of a massive, massive range, W formation, whatever you call it, at $20. The depth of this range, multi-month range, since 2019 is multi-year range. It's 7. And all this time I wasn't tracking this stock. I'm like, what is wrong with me? Okay, so 7, range is 20. That's $13. Let me write that down so everyone remembers. $13. Add 13 to 20. The stock is going to go to $33. And it's going to happen very quickly because they just, not just they got added to the S&P 600, the numbers are going nuts. It's a phenomenal technical breakout. So please put that on your list. All internals are go. ELF, ELF. This is Ulta Beauty on speed. All right, throw me one of the two names, and then we gotta wrap it up.
May I? BLNK.
Of course.
Thank you.
So this is BLNK's daily chart. Obviously, there was some selling at the end of the year. 1 second, let me just clean this out.
They just had good news today.
What was the news?
They said that they're the top SPAC stocks to buy for 2021. One of the.
Oh, okay. Where did you? I mean, who said that? Some analyst or some barons or what?
Oh, look at it. Newswire, Benzinga.
Okay, that's great. More coverage we get, fine. I'm long and strong this stock. I think this stock is going back to 55 and higher. I am totally bullish on Blink. I've been talking, we've been trading Blink since the stock was in this range, if you all remember. And from a technical standpoint, it doesn't matter where you're coming in, but where is it going? So let me just put it out here. Now remember, this is a small cap stock. Not that small, but still, it is quite overvalued. It is directly tied in with clean energy and EV, electric vehicles. So the days that Tesla doesn't do well or something like that, Blink might be, might kind of in sympathy will be down the particular day. Just keep that in mind. So extend to the right. So I am looking at $60. This chart-wise, this is your support. The support is 38.86. I would say the support is 40, right there, 40, right there, and right there. This book. The red candles you can see here on Friday. I'm sorry, not Friday. Thursday, it was down on very light volume. Always look at the volume. Okay, on light volume, the stock was down. Obviously, there's some, portfolio rebalancing going on and all that stuff. I would say the stock is 60. More importantly, if somebody wants to look out more, because these companies are the pickaxes being sold to the gold miners, right? Because without charging stations, what good are EVs? Think about that. What are electric vehicles? You need the gas stations. These are the gas stations. So from a Fibonacci standpoint, the stock literally down the road, I don't know, don't ask me for a time frame, sometime this year can go to $90. I personally think it's going to get bought out. I think it's going to get bought out. Nikki, you want to? K-Bot? I can hear you. What is it? Another point I want to make to all my members, resolution for 2020, buy a good headset, all right? The ones who don't, please, cost 20, 25 bucks, buy a nice headset, who are the ones who make it? From Logitech, those are the ones that I use. They're fantastic, please. Yeah, Nikki, which one are you talking about? I couldn't hear you.
Big C.
What? Can you say it again? Oh, Big C. Yes. Okay, I got it. Big C. I'm underwater. I'm still bullish. The stock basically is resting at the 50-day moving average. If the best case scenario is the stock holds the 50-day moving average. 1 second. This is a patient play. I can't really guide people on a day-to-day basis. I'm just sharing my thoughts. What I think is, IGC, India Global. That's not one. That's a Big C. There you go. So here, so Big C is basically at this point at major support, and that major support, give or take a few dollars, is between 60 and 63. Every single time that the stock has come down here, and you have to go by past pattern, every single time that the stock has come down here, it's bounced hard, and hard meaning it has bounced up towards 80, and hopefully it happens this time, but it could slip and slide down to 60. Absolutely nothing wrong with this company. Do some homework on your own, read up on it, why it's an attractive company for the digital economy, for online shopping. So at this point, it's at major support. It can still slide a little bit towards 60. Like I said, I don't particularly day trade this stock. I just hold on to it. I'm going to keep on holding on to it. I still believe that one point the stock is 110. It did manage to go to, like I said, it did manage to go to the upper end of the range, which was 86, if you remember, just at the first week of December. And from a trading standpoint, it is disappointing when you see it kind of sliding down, but I don't particularly care. I like the company a lot. I think it's at major support, give or take plus minus 2 points. On the downside, like minus 2 or 3 points, I think the stock will bounce. And I believe that the pressure on the last 4 days of the year was primarily due to tax loss selling by some funds and individuals who probably would bought the stock, around the 80 level or something. So they had to, they basically did some tax loss selling to offset taxes on the winners. So that's what I think about Big C. Okay. Anyone else? Yes, no?
Can you hear me?
I can hear you. Go ahead, sir.
Yeah. It's Paul here. Yeah, I just want to mention, there's a big tech out there right now that I think is flying really low under the radar. You mentioned the PEG ratio earlier in the call, and this big tech has a PEG ratio of under 2 right now. And
wow. Go ahead.
The revenues are ramping. It's got a massive share buyback program. And later this month, they haven't said which day, but they said this month, January, they're releasing a digital currency. And of course, I'm talking about Facebook.
Wow. That would be absolutely phenomenal. I mean, Facebook, okay, this is Facebook's chart without any lines drawn. And honestly, it's a good looking chart. Why? Because look at the chart. Let me just draw some lines here with like they say, back of the napkin drawings here. Facebook has been moving sideways, literally, for about a month now. That's what it's doing.
You got the wrong ticker there, Frank.
Oh my God, that's what I was thinking. Barnes Group. Wow, that's Barnes and Noble.
But it has been going sideways, yes.
Okay, here is Facebook. It's already drawn. I was thinking, like, why are the lines not drawn on Facebook? Because all right, so let's do this. So Facebook basically is in a triangle formation. It again is being suppressed for whatever reason below the 50-day moving average. All I know is one thing from my years of trading and understanding the markets. Powerful big cap growth companies, like big cap tech growth companies like this, do not stay under the 50-day moving average for too long. So I totally agree with Paul, 110%, that this stock, it will break out, and when it breaks out, it'll be very fast, very quick, and we'll hit 288. The triangle on the upper end, if you look at it that way, it's like a massive bull flag, is 291. On a short-term basis, if somebody wants to trade it, the stock needs to break out over 281, and it's going to hit 290, 292 very fast. And the catalyst would be some of the things that Paul talked about. Yeah, go ahead, Paul.
Yeah, exactly. I think the catalyst is going to be this digital currency. It's called Diem, and they used to have one called Libra. But what happened is they had
I remember Libra. Yeah, Libra. Yeah.
Libra. Yeah, the regulators didn't like it. There was too much involvement of Facebook directly, and
I know
a few things regulators didn't like. But what this Diem is it's a stable coin, so it's totally different than Bitcoin. Bitcoin realistically can't be used in commerce or by governments because it can move 10,000 US in one day or even in 1 hour. So what Facebook's solution is they're coming out with a stable coin. It's basically backed by actual currency. So they're going to, they really toned down their ambitious plans and just really made it really basic. So they're going to have like a stable coin backed by the US currency, for example, and then they'll have one backed by other, like the euro will be another stable coin that they come out with. And what it's going to do is it's going to really open the door for e-commerce. And how Facebook benefits from it, it's not like Bitcoin, how it goes up and down in value because it's just the US dollar, for example, that's the value. But how they're going to benefit is all the platforms, the WhatsApp, they deal with Shopify, the online stores, like everything is already set up to be able to transfer money. So they're just going to get a whole bunch of extra users and business owners using this. So they're going to get that pop, I believe. And as your chart shows, there was a false breakdown. I believe it's going to turn into a false breakdown. It's basically a triangle that looked like it broke down, and I believe that's going to end up being a false breakdown.
Completely agree with you, and I appreciate the information. Everyone heard this, loud and clear, because Paul follows Facebook and a bunch of big cap tech companies better than anyone else that I know. So we really appreciate that. In my opinion, if somebody wasn't really just constantly trading, then they should. This is really what's going on with Facebook. It's all it's doing is actually moving you sideways. That's it. And the range is basically in the 290 range. The lower end of the range is around 260. Let's call it 265, and that's all it's doing. And that's what it's been doing since November. And some days it spurts up, pulls back, and now it's been just moving sideways. So as this range, in my opinion, will be just to move from here to here is 20 points. I think we should take advantage of it. If it breaks below the range, that's a different story. In that case, 243 comes into play. But there shouldn't be any reason why I should do that. But you never know. All I know is that as long as it holds the 260, 265 range, 264, 265, the stock is a complete swing trade, and buying the calls going into going into March would be fantastic, or somebody like Paul, like who buys it like many months out. But I would buy it into February and March, and I think it's a fantastic play, because all it's really doing is moving 25 to 30 points, which is a lot for options traders, but that's from a longer term perspective, that's really what it's doing. Okay, Paul, I appreciate that. Chris, Leah, thanks for stopping in. Mike, Nikki, Paul, again, good night.
Good night.
You too. Let's have a great week. And again, let's try to keep those pointers I mentioned at the beginning of the webinar. Let's keep it mentally written in our impatient selves that we all are, and let's learn from our mistakes and go into the year with confidence, but with also some regrets and anger about things that we did not do right. And let's turn our that into positive that stress into positive stress. This year, let's not let go of some monsters that we're picking up on the lower end of the scale, and when they start running, we just sell it, and then we don't look back at it. Let's not make those mistakes again. On that note, have a great evening. God bless you all, and Happy New Year.
Bye.
Thank you, Frank.
Take care.